Yo, what's up, guys? What's up? Welcome to today's lesson, right? Okay, so as I promised, right, I'm just going to continue with what I actually introduced, right? To get to teach you about the session strategies, right? Firstly, the first strategy we have got to call what I call the agent strategy, right? So I'm going to teach you on the agent strategy, how to actually trade using the agent session, right? So for you to be able to trade with this strategy, first of all, you have to understand rule number one. Then rule number one, I have actually placed it in this video, right? I uploaded this video so that we understand rule number one of using the direction, right, and riding on the momentum of the previous daily candle, right? That you get it from this one, from this video, right? Then on setting your chart, right, setting your indicator, right? This video that I uploaded, right, on trading sessions, right, trading view indicator, right, for the trading sessions. This is where you get it, you set it, then you come to what I have to explain today, right? So you follow these two videos, right? Then they will allow you, or they will enable you to actually trade using this strategy, right? So today's lesson, like I said, agent session strategy. That's what we are moving with, right? So let me get straight to it and explain, right? So what happens is on each and every day, right, your day is going to start with the agent session, right? The day is going to start with the agent session, right? Okay, your day is going to start with the agent session, right? So you're going to realize that your market the previous day, it will be dropping, right, like that, right? So if it is dropping and it enters agent session like this, price will start to consolidate. It starts to range, right, within a certain region, right? It will be creating the liquidity, right? Before price moves on the new day, right, it makes sure that it grabs liquidity. And in most cases, it grabs liquidity both to the upside, right, and to the downside, right? There is sell stops liquidity and there is buy stops liquidity. So firstly, they grab that liquidity first, then they'll make the move of the day, right? So usually if the market was in a downtrend today, we all expect that the market will just follow that direction, right? We are riding on the momentum of the previous day, right? So what we're going to see on that very day, right, many times price is going to come up first, right, so that they grab the buy stops liquidity. On grabbing the buy stops liquidity, that's when they'll be forming the wick on the daily candle, right, the tail on the weekly on the daily candlestick, right? So they come up to grab all this liquidity, this sell stops liquidity, right? So they come, they grab it, right? So when they grab it, right, they can rush back into the zone, right? Then they come, they insert a funny pattern there that you know, respecting structure. Then if they form that pattern at the highs of the Asian session, then you're going to take a trade, right, targeting the lows. That's your first TP, right? Then after your first TP, obviously you're going to target some other lows that are on the previous days, right, as your second what, as your second TP, right? So basically this is the structure of the setup that I'm going to teach you or show you on the agent session strategy, right? This is for the sell side, right? If it is for the buy side, the same scenario is going to happen, right? You make sure that your previous day was bullish, right? You make sure that your previous day was bullish. If it was bullish, then it means that in many cases, times they might start with the buy stops liquidity, right? Then they'll decide to go down, right? But many times, right, they'll do this. They come, they just grab that liquidity, right? So on grabbing this liquidity, they'll be supporting a structure that is to your left. There might be an order block to the left, maybe. Let's say the order block is here, right? So they'll push down, right? They are trapping all this liquidity, right? Then they come to those lows and they will form a pattern there, right? Then they will push upwards. So we're going to end our buys there, right? And our first target is the high of the what? Of the Asian session, right? So on the high of the Asian session, we take our first profits. Many times they react to that, right? Because they'll be trying to approach inducing sellers there, right? Before they can grab that liquidity, and also inducing the buy stops that are actually lying above the Asian session, right? Then they push upwards like that, right? Then they will continue to target new highs on the other support and resistance that will be having there, right? So you realize that at these lows, right, you might be having an order block or a demand zone there, right? But make sure that the previous day was bullish. Then you can anticipate for these bulls on the new day, right? So this whole move, right, this whole move on the daily candle, usually it will be a week. This whole move, sorry, this whole move, it will be a week. This whole region, it will be a week, right? On your daily candle, it will just be a week, on the daily candle, right? I'll show you that, right? So let me get straight to the examples, right? So I decided to show you live examples, right? That actually occurred today, right? In the markets, right? Of course, if you look at our time, right, we're still in the London session, right? We're still in the London session. So with London patterns, right? With London patterns, right? But under the Asian strategy, right? So our market, it means we're focusing on pairs that are related to the London session, right? The euro and the pound, right? That are related to the London session, right? That's where you actually look for those trades, right? If it goes beyond the London session, right, then you're looking for pairs that are related to the what? The New York session, right? And you trade those pairs, right? So let's get straight to our chart and explain what we have, right? So rule number one, remember, we go to our daily chart, right? We go to our daily chart. We ensure that our daily chart had closed bullish, right? Our daily candlestick had closed bullish, right? So in this case, if you look clearly, right, it's so simple, a simple strategy, right? My previous daily candle, it was bullish, right? So it means today I'm just looking for bulls, right? I'm not looking for sales, right? I'm looking for bulls, right? So straight I go to M15. And on M15, what I'm looking for, I know, rule number two, right? I'm now attending to my Asian session, right? So this was the close of my Asian session, right? And it actually closed with a range of about 82 pips, right? So usually my first target there is within a range of 82 pips, right? So this is the low, right? So I know that below the low of the Asian session, what is it that I have there? I have liquidity, right? We talked about liquidity. That's liquidity that we have there, right? I have liquidity. That's what is lying below that, right? These are sell stops liquidity. So before the market pushes upward, it has to grab that liquidity first, right? Then where does the market stops on grabbing that liquidity? If you look on the previous day, usually you should see a certain supply or demand zone. Actually, this one is in a bullish trend, so you look for the demand zone, right? So in this case, we had an order block sitting right there, right? So you just mark it, stretch it to the right, stretch it to the right, like this, right? Stretch it to the right, right? If I want, I can drop down to lower time so that I can reduce my order block etc, right? But let me just because I want it below the Asian session, right? So if I drop it to lower time frames, it will be an order block like this, right? So after grabbing the liquidity, they take the liquidity, right? Then they started pushing upwards, right? So they formed a W pattern right at that bottom, right? Then we started pushing upwards, right? To many traders who might not have early confirmation, maybe you wait for 2 bars, first bar, second bar is a confirmation, closing above volume. I explained another video explaining on volume, right? Then you're going to take your trade from this region and you push upwards, right? That's a confirmed end right there, right? So if you look at the risk reward ratio of this trade, right? This was the risk, right? This could have been the risk if you're risking below the order block, like that, right? This is a confirmed end, right? Then your target, it was targeting at around this high, right? So this is a scalp end that we're getting, right? So the risk reward ratio of this trade, 54, you're risking 54 pips, right? To make 58 pips, more like a 1:1 risk reward ratio, right? But to catch early entries, what you have to do now, you're stepping down straight to M1, right? You look for your patterns there at M1. Let's do that so that we can reduce our risk on that entry. So that we can reduce our risk on that entry. Right. So we had our structure. If you look on M1, right, it created that low, that high, right? Then the market came, it broke this high. Right there you can see a couple of candlestick closing above that region. Couple of candlestick closing above that region, right? So that's a BMS right there, right? Then you realize that you had an order block right there. This is an order block, right? So it means that you are now risking that. And this is the demand zone, right? This is a church actually that you got there, right? Then this is your demand. So your risk still will be reduced all the way to below this order block, like that, right? So on moving to lower time frames M1, M5, right, you're going to be reducing your risk, right? So after reducing your risk, if you look at this trade now, right, it's now a better trade, right? You are risking only 16 pips, 16.6 pips to a target of how many pips? 82 pips, right? So this is how we trade this trade, right? If you're just going to stick to M15, the entry was right there, right? Using 2 candlestick confirmation close, right? Explain that previous videos, right? But if you're just going to use your church, your structure and the reversals, right, on lower time frames, this was the entry on Euro NZD, right? And a wonderful trade. Already, we are about to close the London session, but you've secured your bag in the London session, right? So this is the Asian strategy, right? So let's go to other examples that we have in our charts. Let's get to other examples, right? So this was Euro NZD. Maybe I'll explain one more, right? Let's go to Euro CAD or Euro AUD, right? Exactly. This is what we had, right? So this is Euro CAD, right? This is the structure that we had, right? So the previous day, if you look, it opened there, right, and closed there. So it was bullish, right? There's no need of going to the daily chart because I have my period separators, right? Then if you look at the structure, there was a BMS there, right? This was an impulse. We're looking at the corrective, right? So this whole region, if you look at it, that was our demand zone. This one. This was our whole region for the demand zone, right? And what's below the Asian session? I said below the Asian session, they're creating liquidity, right? They're creating liquidity with the Asian session, right? So the market simply has to grab liquidity, sell stops liquidity, then it will push upwards to grab the buy stops liquidity, right? So we're going to take a trade, right? Okay, so this is how we're going to get the trade. As price got into what demand zone. This origin is a demand zone, right? I didn't take the order block, I took the raw range, right? It's our demand zone, right? So as price gets into the demand zone, what do, right? Let's go straight to our M1, right? And look at our patterns that we actually get there, right? And look at the patterns that we actually get there. Easy trading, right? You don't have to complicate the markets, right? Everything just has to be simple, right? So if you look at it, this is the last high that we had, right? This one, right? So it was violated here. The market pushed upwards, right? The market actually pushed upwards. It broke this structure. After breaking this structure, we see that it had set this, it had mitigated this last order block, right? This one was not mitigated, so there was a possibility of price actually coming to this region. Let me remove this one for now, right? There's a possibility of price coming to that zone, right? Or coming to this order block that is right there. So you'd mark that order block like that, right? So you risk either in that zone or in that zone, right? So let's put a target for this one. Long. Okay. Sorry. Okay, so this was our risk region. Right, then our target, like I've said, you are targeting the what? The Asian high. This one. That's your first target. That's your first TP. Right. So on this trade, you had a church here. You had a church right there. Right. Then this is an RT. Oh, coming back to order block. Right. There is some trend line liquidity. You apply all the concepts that you know. There's some trend line liquidity that had to be grabbed there. It was grabbed, then tapping into our order block there. Right. On our second risk there, right? Then the risk ratio of this trade, you are risking 7 pips to 33 pips, right? So it's a risk ratio 1:4. That's too much. You are risking $1 to make $4. That's too much. $100 to make 400. That's just too good risk ratio, right? So this is the second example that I had, right? I would go on most of the euro pairs, right? The pairs that actually you move in the euro session, right? And give you examples or show you examples that we have there, but I don't have enough time, right? This had to be kept short for many reasons, right? The other trade that I actually had there, it was on this euro AUD. Just similar trades, right? So already in the London session, you have three Asian session trades, right? You have 3 trades that came about using the Asian session strategy today. So you have 3 wins already on this day, right? You're waiting to trade those that will actually appear, okay, in the what? In the New York session. So already you're in a profit. Your day is already profitable, right? Nice and easy, right? Don't complicate things. Just keep things simple as this, and you can secure your back, right? So I believe I've actually shared good information to someone, right? Believe you've learned something, right? What you can do now, right? You can leave a comment in the comment section, right? You can as well inbox us, right, through our Telegram channel, right, under Sniper X Forex Empire, right. You can as well come to my inbox, right. We chat. If you want the proper mentorship, yeah, it's still available. We're still running the mentorship, right. If you just want some advice on trading, I'm available, right. I can always offer you advice on how you can actually maximize in these Forex markets. If you're actually a total newbie, right, you can easily inbox me. I'll be happy to actually assist you from opening your accounts, till you can actually get to trade for free, right? For free. All right, guys, thank you on this session, right? Remember something, don't forget to like, share this channel with your friends, and subscribe. If you haven't subscribed, make sure you subscribe, right? That gives us the motivation to actually continue pushing work on this channel, right? If you look at it, we are now sitting on 952 subscribers. Thank you very much. Sorry, thank you very much, guys, for your support, right? I believe we are growing and will continue growing as I give you more important information on this channel, right? See you next on the next video. So on the next video, I'll be explaining, right, the London patterns, then the New York patterns, right? This was just the Asian session strategy, right? So we have other strategies that we can use applying the same concept, right? But the approach differs depending on the time that you're going to enter your trades. So thank you guys for your time, right? Stay blessed.